Hello everyone, welcome to the international news on May 17, 2023. In today's news, we are going to find out more about the manifestation of the globalization of the world capital markets. So at first, we'll go through some definition to help you have a better understanding of our discussion today.
According to National Geographic Society, the term globalization is used to explain how trade and technology have boosted global connection and interdependence. Globalization also encompasses the societal and economic changes that result from it. Capital markets are suppliers and people in need exchange savings and assets. Banks and investors are frequently referred to as suppliers because they can offer loans or investments. Corporations, governments, and private citizens are looking for funding in this market. A global capital market is a network of interconnected investment exchanges that allows people and organizations to purchase and sell financial securities on a worldwide scale.
So now we are going to the most important parts of today's news. Besides the positive aspect of this issue, there are also some negative sides that we need to discuss, and I interviewed some economists to share with us about some opinion about this problem. So firstly, it's about the positive aspect of the manifestation of the globalization of the world capital market. So we have our special guest today, Ms. Huyen. So can you give us the most significant effect of the globalization of the world capital market?
Absolutely, yes. One of the most significant manifestations is increase the cross-border in capital flows. The integration of the global capital market has increased the cross-border investment opportunities and lowered the risk for investors. This has allowed the investor to diversify their portfolios and access a wider range of investment opportunities, providing more efficient allocation of resources globally. Reducing the reliance on the specific regions or industry could create the growth opportunities for developing the countries, allowing them to attract outside capital for domestic development. Developing countries have attracted foreign capital through the favorable investment conditions, leading to the economic growth and job creation. The company can access international capital and through various means such as the capital equities, the bonds, the IPOs, and globalization has enabled the multinational corporations to operate worldwide and outsource the jobs to save costs.
Thank you for sharing us a lot of useful information. So we also interview another guest who is working in the Bank of America to share us what she thinks about the positive side of the globalization of the world capital markets. And now we'll contact her. Hello everyone. Thank you for inviting me to share my opinion about this problem. So from my perspective, with the globalization of the world financial markets, now firms have access to a larger market from all over the world. So it means that they are not only competing with the local businesses but also international firms. So it requires the firms to work harder to differentiate themselves in a crowded marketplace. And moreover, this also requires the firm to change the market conditions such as consumer behavior or technological innovation. And moreover, this also increased the investment diversification, investing in different markets and regions spread the risk of investment portfolio, because if one market or region experiences a downturn, it may not have a significant impact on the overall portfolio if it is diversified across different markets or regions. So that's what I think of it. Now the next expert will share another opinion about this problem. Miss A.
So hello Ms. Nhung and the audience of the international news today. And the next important manifestations that I want to give you guys is the strengthening of the communications and the cooperation between countries. Cooperation between countries through FTAs mean that free trade agreements have helped strengthen the cooperation and among the countries around the globe. And a FTA is a pact between two or more nations to reduce barrier to imports and exports among them. And under a free trade policy, goods and services can be bought and sold across international borders with little or no government tariffs, quotas, subsidies, or prohibitions to inhibit their exchange. And thanks to the FTAs, the country can consume and produce the product and service at more competitive prices, thereby the strengthening trade relations between countries can improving the production process. So participants in the international organizations such as the United Nations and the WTO has created an environment in which countries can negotiate and discuss issues of the global trade and finance.
Thank you for giving us such useful information.
Thank you.
So besides these great opportunities that financial market brings to the investor, there are also some risks and challenges that the firms need to face with. So Ms. A, what is the risk that you first think of when talking about the globalization of the world capital markets?
Well, when it comes to the risks that the globalizations that pose for each countries, the first thing that I think is the impact of disparities between the economies and the economic plans. That means in the evolution process, these countries there is an inequality between these economic plans and the true economy that is happening in the real world. So although these many countries, developing countries that are looking for the strategy or the plan for boosting the growth of the economy, they also face up this thing. This is the disparities. When the developed countries that promote economic growth policies which go low interest rates, and foreign investment funds can withdraw capital from developing markets to invest in other developed markets. This can lead to this bad influence on economies, especially the capital market, and it results in, a slowdown in the economies of developing countries and makes it difficult for the companies or investors that put their money in the capital market.
So thank you for sharing your opinion.
Thank you.
So this is Ms. Phuong, and can you share with us what you think about the risk of globalization of the world capital market?
In my opinion, another significant drawback of the global capital market is the risk of the economic instability. Since the globalization process has made the world become more and more interconnected, financial crises in one region can easily spread across the borders and have negative impact on the others. For instance, the global financial crisis in 2008, which first occurred in the USA, has dramatically spread all around the world, and it undoubtedly has affected the efficiency of the global capital market as well as the financial activities. To be more specific, in Vietnam, the financial crisis has led to the downward growth of the stock market, and during that time, the volatility of the market conditions make it challenging for issuers to seek financing in the capital markets. Moreover, initial public offerings of some businesses has faced some difficulties or even were postponed. And the number of employees who lost their jobs increased
Therefore, this phenomenon has had a bad influence on the economic growth of the country. In addition, the globalization of the capital market has also been critical blamed on the volatilities of the national capital markets in certain countries as a result of excessive capital inflows and outflows, income inequality, and international tax competition between different nations, and the event that the interest rate of the U.S. Federal Reserve has been continuously raised and is expected to continue until 2023 will continuously have a negative impact on stock in general.
Thank you for sharing your opinion.
So the final manifestation is greater independence on national economies. So Ms. Huyen, can you share with us your opinion about this issue?
So from my research, that means the integration of the global capital market has led to the greater interdependence among the national economies, making them vulnerable to the financial shocks and crises. Therefore, every policy and the development strategy that a country must be examined and considered in terms of its dependence, constraints, the close relationship with another country, the movements, and also the policies of other countries. The globalization has impacted a nation's ability to control and regulate the macroeconomic levels, leading to the challenges in raising the tax revenue. With individuals having more choice and options at their disposal, it's become easier for them to avoid paying a high tax. International organizations such as the World Bank, the WTO, played a significant role in promoting the global economic growth and stability.
Thank you.
Thank you for all of you guys following on of these highlight contents about the manifestations of the globalization of the world capital market in the international news today. I hope you can get more useful information as well as the overview of this phenomenon. If you feel this video news satisfied you, please give us one like, one share, or comment below, which can support us to release more interesting video. Thank you.